Okay, today we're going to go over Tom's trade rules, rule number 13. And today's rule is reconcile trades on a weekly and monthly basis and analyze your winners and losers and why you failed or succeeded. So in rule 12, we talked about recording all of your trades and journaling your trades and your metrics. So that was rule 12, is track everything. Rule 13 goes part and parcel with that together, but rule 13 is actually reconciling those. And how do you do that? How do you reconcile your trades? Why do you reconcile your trades? So in this rule, we're going to discuss more about reconciling trades on a weekly and monthly basis, analyzing your winners and losers, as well as the reasons behind your successes and failures. And those reasons are an important practice in the world of trading and investing. And the process serves several key purposes here. Number one, performance analysis. Regularly reconciling and analyzing your trades allows you to evaluate your overall performance. By tracking your trades on a weekly and monthly basis, you can see how your portfolio is performing over different time frames. This is going to help you understand whether your strategies are effective or you need adjustments. So the first thing we're looking at weekly and we're looking at on a monthly basis is, how are our trades performing? What trades are doing well? Which trades are doing poorly? And we're looking at that on a strategy level. So first, we're going to look at which strategies are working, which strategies are not working. Next thing here is to make sure you can identify patterns. Analyzing your winners and losers over time is going to help you identify patterns in your trading behavior. You might notice that certain types of trades consistently result in losses, while others consistently lead to gains. I found this especially true in my trading in the past, where I really wanted to do certain either zero DTE trades, or I wanted to do breakout trades or something along those lines. And I was consistently doing those trades and most of them were resulting in losses. And I tried to evaluate what I was doing and really just found that whenever I was doing those trades, those led to the greatest number of losses for me. And simply just cutting those strategies out, I know I could have found a way to improve them. I just cut the strategy out. So identifying these patterns allows you to adjust your strategy and capitalize on your strength and your weaknesses. My weakness absolutely has to be stock picking and trying to pick movement in a stock. I hate stocks. I don't have any stocks in my portfolio. I think I own a Leap on Apple and a Leap on Enphase, and that's it. There are no other stocks in any IRAs, in any trading accounts, my family's IRAs, my family's trading accounts. Nowhere will you find stocks, because I'm just not good at trading individual directions in the market. So learning and improvement is the next phase here as to why we analyze these things on a weekly and monthly basis. So examining your losers provides you valuable insights onto what went wrong. What was the fundamental flaw in your analysis? And for me, my flaw was buying the doggone stock. I felt my analysis was solid. I looked at the charts. I feel I'm pretty good at charting. I thought I had a direction right, and I would get into a trade, and then some yo-yo would open their mouth and tank the stock. 10% or something like that, or some other stock would come out with bad news, which would affect my stock. But you're looking and trying to improve. Did you ignore key indicators? Many times for me, what I failed to look at when I was making a lot more mistakes was I wasn't looking at different time frames as much. Maybe I'm trading the daily time frame and I really ignored the weekly time frame. And the weekly time frame was down. So even though on a daily time frame I saw a great looking opportunity to get in on something, it was in a downtrend overall on the weekly basis. So my key indicators now is I look at everything in dual time frames. If I'm trading some zero DTE directional stuff, I'm looking at the 15 and the 3 minute. 15 is telling me when to get in and out as far as what direction, so forth. And the 3 minute is telling me the exact trigger of exactly when to get in and exactly when to get out. but the 15-minute, the larger time frames are really my guiding factors. The other thing to learn and improve on is, did you let your emotions drive your decisions? Why did you get into that trade? Did you get into that trade because a bunch of yo-yos on YouTube said, hey, you got to get into TLT or TMF now and buy NEO, and NEO's going to explode, massive gains. I can't stand these guys. But anyway, are your emotions driving your decisions? So by identifying these mistakes, can you take steps to avoid repeating them in the future? I find by having that trade strategy and following it, I'm going to remove my emotions and not make those mistakes. So reinforcing successful strategies is another great reason here. On the flip side, when you study your winners, you can understand why your trades worked. What did you do right? What indicators did you rely on? How did you manage your risk? By recognizing the factors that contributed to your success, you can reinforce those strategies in your future trading decisions. So look not only to see what went wrong, but look to see what's going right. Why are those trades going right? Which ones are doing better? What did you do that improved maybe the overall results of that trade? Right? And then continuous improvement. Trading is a dynamic field, and the market conditions can change rapidly. No one trade works forever, and that's a key to write down for you. No one strategy is going to always work all of the time. Eventually, strategies get stale, and they have to be improved. Okay, they don't work forever. Markets change, conditions change. Nothing works forever. So regularly analyzing your trades allows you to adapt and improve your strategies based upon changing market trends, economic news, other factors. This iterative process of continuous improvement can lead to better trading outcomes over time. And your goal is to get a little bit better every single week, every single month, a little bit more of an improvement in your trading. And it takes a while. You're not going to get a whole lot better in just a week. Maybe you can get significantly better quickly by getting rid of some of the trades that you shouldn't be in because you really haven't been good at them. And you just keep going back to the well and trying stuff that's just not working for you. Just because somebody else does it doesn't mean you should. So how do you get better? Okay, continuous process improvement every single day. The Kaizen philosophy of continuous process improvement is key. And then risk management here. Reconciling and reviewing your trades helps you keep track of your risk exposure. You can analyze whether you're over-concentrated in certain assets or sectors, which can make you more well-informed, and you can make better decisions about risk management and your portfolio diversification. I know when I'm reviewing my portfolio, I am looking for concentration risk. Oftentimes, because of the style of trading that I do, which is mainly futures, I trade probably 90+% of all of my trades are done with futures or options on futures, probably 95%. And there's always a heavier concentration sometimes on ES than many others. So when I'm low on trades, it's time to put on a new trade. I'm always looking to see, based upon the way my portfolio is constructed, I'm reviewing to see, are you overweighted on anything too many? Sometimes maybe I get too many CL or oil trades, oil futures trades. Okay, yep, then they got to back off. Something comes off. When I put something new back on, I look at my overall portfolio and I make sure that maybe I don't add to something I already have too much of. All right, and then emotional discipline here. By setting a routine for reconciling and analyzing trades, you establish a sense of accountability and discipline. This can prevent impulsive decisions and encourage a more thoughtful approach to trading. When performing routine analysis, you turn your trading from a hobby into a business. If you're taking notes here, I want you to write that down, and I want you to circle it 3 times. Trading is a business, and you should treat it as a business. It is not a hobby. If you treat it as a hobby, you're going to get smoked. Okay, you got to treat it as a business, and treating trading as a business and analyzing your P&L and your metrics helps you keep emotion out of your trading. If you are running a business and you're running a successful business, you are looking at your P&L. You are analyzing your trade metrics, your sales metrics. You're analyzing every piece of it. That's what I did for a living, so I think it makes it easier for me, but I'm a process improvement guy. and I come in and I fix businesses, but we look at the metrics, we look at the P&L, we look to get rid of underperforming assets, bring in new assets. Okay, treat your trading as a business, and that will help your emotional discipline. The legendary trader Victor Sperando said, "The key to trading success is emotional discipline." If intelligence were the key, there'd be a lot more people making money trading. Okay, so it's not all about intelligence. Okay, it's not all about the charts. Everybody can see the same exact thing. The key to trading success is emotional discipline. Those people that can treat it as a business and can keep their emotions under control. So, strategic trading, making sure that you're tracking and reviewing on a weekly and monthly basis your trading strategies. So remember, the goal of this practice isn't just to maximize profits in the short term, but to develop a well-informed, disciplined, and adaptable approach to trading. It's about learning from both success and failures to become a more skilled and strategic trader over the long term. I recommend weekly and monthly reviews and analysis to improve your trading and your ability to run your trading like a business. If you like this video and you got a lot out of it, go ahead and click that like button. Please share this with others. I hope this helped you. Follow my other videos and see how every single day I'm analyzing my metrics daily, I'm analyzing them weekly, and I'm analyzing them monthly. If you follow my videos and my strategies, you're going to be able to turn your trading from a hobby into a successful business. All right, everybody, take care and put this rule into play.